It just seems like these earnings reports are just, basically highlighting something that we've seen for some time, that, things are not getting any better in the property space. Do you think that things could get any worse, is my question.
Hey, morning, Yvonne. I think the problem we're seeing right now is really reflecting. We are not really focusing on profitability right now. We have seen distress for the past 12 to 18 months over the period. So what we're really focusing is in terms of cash flows and in terms of balance sheets. And in that extent, we're still monitoring. I think the recent news in terms of mortgage boycott, etc., we're worried that those kind of sentiments could spread, and whether the home buyers will actually walk away from the private developers, because contractor sales remains the key for them to generate cash. External fundings remain extremely difficult. So that's the key. So we are monitoring whether contractor sales are continue to be affected by the current sentiments.
How do you think these mortgage boycotts have kind of changed the credit profiles of some of these developers? Now there seems to be more emphasis on trying to build these projects more so than addressing the liquidity concerns.
I think the end buyers at the moment are concerned with two things, right? You have the historical cyclical downturns. They worry about the property prices, whether they're going to go down further in the near term. The zero COVID policies is having a lot of confidence issue with the end customers, whether they want to commit into long-term purchases for properties. But on top of that, we now have something new, whether we have nationwide developers essentially going into distress, default situations. They can't deliver in terms of the pre-sold properties. So that kind of concern is also affecting a lot of end customers. They are still buying potentially more from the SOEs, but the POEs are suffering. So if we look at the sales numbers, the SOEs are outperforming massively against the POEs. If that continues, that really cut off the major source of cash and fundings for the private developers. And with bonds coming due, etc., that's a major issue.
What do you think could be a potential white knight in this industry right now? People are saying it could have been the bad debt managers, but we're seeing when it comes to those earnings, they are just crumbling here on the back of this turmoil in the property sector. Some people saying these SOEs are going to be the ones that are going to help out with M&A. Do you see any sort of white knight here that's going to solve all of this? Or is this just going to be a lingering, burning problem for some time?
I think the scale of the issue is so large that no one single party is able to step in. I think we have the banks, the developers, the SOE developers, as well as end customers having a bit of a confidence issues. So what we really need is that the government to come in a bigger way. But I think the government remains very committed in terms of stabilizing the sectors, but they also are now showing that they want to rely on market-based mechanism. They're not trying to bail out the sector at all costs. Because they're very committed in terms of the policy of properties not for speculating. So there's a fine line between what they wanted to do and what they can do. In that regard, we still await. We've seen a very targeted policies that come through. We've seen, for example, Longfor having the onshore bond issuance essentially guaranteed by an SOE insurers, bond insurers. We also have essentially a bailout fund or state coming from policy banks, reportedly from state medias, that going to try to re-kickstart, suspend the project when we have some sort of rate cuts. But again, we seems to be seeing that the government remain committed to the property not speculation policies and try not to reflate the property prices. So there remains the problems that we're still monitoring, and I don't think in the near term we're seeing sales can pick up drastically, and that's really important for POE developers, as we just mentioned.
Yeah, you really have to just kind of find some way to get people back into this market. Tyran, then I have to ask in terms of refinancing or the financing channels now that these property developers have. It seems like in terms of the offshore channels, that's basically cut off. Is the onshore still viable?
Yeah, exactly. That's pretty much the drivers for a lot of these developers, POE developers, that we're still rating at a relatively high levels, and we're still monitoring essentially whether their onshore funding channels are being narrowed. We've seen onshore bond prices having a bit of volatility early on, but we're also seeing that the government is now recognizing that there's a handful of privately owned developers that are still operating. They are still operating normally. And then we've seen that the government increasingly taking steps to try to stabilize that refinancing channels to make sure that they can refinance. Because if that got cut off as well, liquidity problems will spread to even higher grade private developers.
Right. I just wonder, I mean, there's just so many fallen angels right now, right? Country Garden is certainly one of them. And this was maybe a few months ago, one of the more resilient names out there. Tyran, what does this mean when it comes to more further downgrades? Are you thinking that you've seen the worst of it? You're going to be doing most of your work already? Or do you think that more downgrades and defaults could be coming in the next few months or weeks?
In terms of the quantum of downgrades, we've definitely seen the worst simply because majority of the private-owned developers are essentially in the B categories or below. I mean, we only have a handful of names which are still in double B categories. We have practically maybe one and a half names, if you count Vanke, et cetera, to be privately owned, then in the investment grades. So in terms of the quantum of downgrades, that's definitely over. But in terms of individual, whether developers can be stabilized at current levels, really to be seen, because we haven't really seen contract sales stabilizing. We haven't seen enough ingredients for that to stabilize. And that's a major driver for not just internal cash generations, but also stabilizing the external funding channels, because I think the bondholders, et cetera, remain very jittery in terms of their performances. If they can't see sales stabilizing, it's very hard without government intervention to stabilize the capital markets.